The estate tax. How to avoid the estate tax and potentially save your family millions of dollars, even if you don't consider yourself to be high net worth. So let's go into the first subject, and that is, what do you need to know about the death tax, about the estate tax? When you pass away, if there's any estate taxes owed, the Grim Reaper's not going to pay the taxes. Your family's going to have to face those taxes, right? It's going to be a big chunk taken out. The current estate tax exemption is $12.92 million per person. That means everybody. And if it's husband, wife, you can multiply that by 2 to 25.84 million. Everybody can pass 12.92 million free of estate tax. If you're over that limit, there's a very punishing 40% tax. So it actually is about 0.1% of current families in America, about 1 in 1,000 families, maybe 2 in 1,000. But obviously in California, Silicon Valley, parts of LA, San Diego, Orange County, it's a much higher percentage. Marin County, we a much higher percentage in the Bay Area and in California on the coast. So you might think that, oh, well, 26 million if I'm married, I can pass tax-free. I don't have to worry about this. January 1st, 2026, there's a cliff coming. So we don't want you to fall off this cliff. There's a lot of ways that we can protect your assets. And here's in the exemption, it's indexed with inflation. That's why it's this weird number. It's actually $10 million indexed with inflation going back a few years, which is why it's 12.92 million this year. It's going to go up next year, almost certainly. But on January 1st, 2026, unless there are major changes in law before then, the current law sunsets and the exemption will be cut by 50%. So it'll go up a little bit before then, but then it's going to dive by 50% on January 1st, 2026. And I want to reframe how we look at these taxes, because we see these articles all the time, right? How the ultra wealthy avoid taxes and pass assets along to their heirs tax-free. And yes, ultra wealthy families do this because they have amazing advisory teams, but it shouldn't just be billionaires or multi-millionaires that are aware of these issues and who build these teams. Even if you do not consider yourself ultra high net worth, talk about the fact if you just own a house in parts of California, you could be close to what that limit will be. And keep in mind, your estate is probably larger than you think, because it includes life insurance, it includes your retirement accounts, it includes real estate. Most people, when we talk to them about their estate size, their first estimate is about 20% lower than what it actually is. We want you to be aware of these issues. And I also want to just make a key point here. I know planning with lawyers or accountants or whatever, it sounds like, oh God, I got to spend money on a lawyer. I got to do all these steps. It's so complicated. I'd actually say we need to reframe this. Estate tax planning and property tax planning, which I'll talk about a little bit later, it is one of the most extraordinary investments you can ever make. Now imagine there's some clients who we work for where we've helped them to save millions of dollars with just a few steps. Now imagine some sort of financial product that you spend, maybe $20, $30, $40, $50,000 on, and it delivers hundreds of thousands of dollars in value to your family. It's extraordinary return on investment. And here's the other thing. So as Ben Franklin said, a penny saved is a penny earned, but I would actually go farther. A penny saved is more than a penny earned. When we're talking about saving in taxes, if you save $1 in taxes, it's actually like earning an extra $1.50 or $2. Because keep in mind, if you save $10,000 in taxes, that would have been $10,000 going out of your pocket. Well, $10,000, if you live in California, what do you have to earn to make $10,000? You might have to earn $20,000 if you're at the higher income tax rates. We get taxed at 30, 40, 50%. So if you save $1, it's actually more like earning $2, up to $2 in California. So again, I just want to reorient how we think about this. Now, so let's talk about why you probably should worry, depending on your financial situation, if you are higher net worth. And let's be clear, the Bay Area and the nicer parts of LA and Southern California, these are not normal places. We're in an area where individual houses can be worth $3, $4, $5 million. So here's kind of a rule of thumb as I think about this. If you are single, if you're unmarried, and you want to pass assets for your kids, your beneficiaries, if your net worth, and again, your net worth includes real estate, your life insurance death benefits, your retirement accounts, all your savings, all your investments, annuities, everything. If you're about $5 million today, you need to worry about this. Absolutely. And if you're a couple and your net worth is approaching 10 million, you definitely need to worry about this. And maybe it's not you, maybe it's your parents, maybe it's your grandparents. who are going to be leaving assets. We have many adult children who come in who drag their parents in to do this type of planning. Let's keep in mind the exemption goes up with inflation, which recently has been high. So it's going to go up 2 to 5% per year in the next few years. But assuming we enter into any kind of decent economic period, your estate's going to probably grow faster than that. Again, the last couple of years haven't been so good, but historically, estates grow 6, 7, 8, 10% a year during decent economic times. So the point is, your estate's going to grow as the exemption shrinks. And just to emphasize that point, as we think about tax planning, should I worry about this? The rule is 72. If your assets grow at 7.2% per year, they double every 10 years. So let's hope you get 7% returns, and maybe less than that. Wherever you are today is much less than where you will be in 5 years, in 10 years. So I just want to reorient. We all need to be aware of this. So the estate tax right now, not too punishing, $12.92 million per person, but it's dropping on January 1st, 2026, unless the law changes in a big way. And it could get worse or better. We don't know, but we have to plan for what we see on the horizon. So you can contact us at gilfix.com, 650-493-8070. I hope everybody's staying safe, sane, and healthy.